Paula, good to see you. How you doing? How you been? First one in today, Pablo. Tor, good to see you as well. How you doing? How you been? Evening. Joe, evening, Miles of CMF. Good to see you as well. Joe, how you doing, brother? How you been? Pure, good to see you as well. Evening, how you doing? How you been? Good evening, Miles, and all the CMF. JP, good to see you as well, brother. How you doing? How you been? Morning, Miles of CMF. Shelly, good to see you as well. How you doing? Morning, how you been? Hey, Miles, how's things? Artistic things are great. Good to see you as well. How you doing? How you been? How's your day been in this hot weather, Miles? Extremely hot weather, I'll be honest. I have the fan directly at me from this angle, windows open, and a towel just in case, because it is extremely hot in the UK right now. In London especially, it is boiling hot. So, how's your day been in this hot weather, Miles? Good. It's been good. Hi all. Susie, good to see you. How you doing? How you been? How's things? Now, let's go through the intro, disclaimer, and what we're going to be talking about tonight's live. By that time, everyone's tuned in for the first part of this live. Good afternoon, Miles of CMF, free and forever. Good to see you. How you doing? How you been? So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. Essentially, I host this live that you're watching right now, Monday to Friday. You can tune to this live 10 p.m. onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world completely transforming into a digital space. We also do live Q&As essentially on this live show as well. If you do have any questions or statements to make, put it down inside the comment section. More than happy to help you out and even read it out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live. If you watch this for the first time ever, and if you're a regular, let's go CMF. By the way, this is episode 324 of the CMF Live. Also, thank you so much to everybody right now who has liked this live, who has retweeted this live on X. I'm getting notifications back to back. Shelly just liked the live. JP just liked the live. Shelly just reposted the live. JP just reposted the live as well. Thanks so much to everybody who essentially is liking the live, retweeting the live right now. Absolutely amazing. And if you watch this on YouTube, you've also liked the live as well. Thank you so much. Adi just liked the live as well. Adi just retweeted the live. Thanks so much to everybody that's doing that right now. Now, if you haven't done that, take 5 seconds to like and retweet. Now, before we go for the first news, and there's quite a lot of news to go, some interesting news to go through on tonight's live as well. Let's go inside the comment section first before we go for the first news, and then we go straight into the first news. So, let's see where we're at inside the comment section. We were at here. Good afternoon, Miles of CMF, free and forever. Good to see you. How you doing? How you been? Joe, good to see you. How you doing? Evening, Miles of CMF. Let's go, Joe Zampa. How you doing? T, hello, Miles. Good to see you. How you doing, T? How you been? Tor says the house in the UKs are not built for the heat. They're definitely not. British homes are meant to essentially retain the heat, keep the heat in, which is why it feels like you're sitting in an oven right now if you're living in the UK with this heat. So yeah, I agree. Hi, Miles, and all CMF. Hope everyone is well. Adi, good to see you. How you doing? How you been? Good evening, brother Miles and CMF family. Funky brother, good to see you. How you doing? How you been? Any good news? Yes, I would definitely say so. Even though the market doesn't seem like it's up or it's doing well for itself, the crypto market, there's actually quite a bit of good news going around, to be fairly honest. Hi, Miles. How are you doing today? Oh, good to have you back every day now again. Let's go, funky brother. Carlos says, hi, Miles. How you doing today? I have a question. A lot of people is talking about BlockTag, and before I spend some money, I would like to ask you, what do you think about this project? Thank you. Carlos, great question. What do I think about BlockTag? Stay away from BlockTag. BlockTag is a crypto project that's been promoted everywhere, and any crypto news article or so on and so on. And I've seen it's been posted everywhere on social media as well before. BlockTag, in my point of view, is a scam project. So I wouldn't touch BlockTag with a 10-foot pole. Scam. In my point of view, BlockTag is a complete scam project. So that's my perspective. Episode 324. Congratulations. Let's go, funky brother. Hi, Miles. Michael, good to see you. How you doing? How you been? AK, hi. Are you talking? What are you talking about here? We talk about cryptocurrencies on this live, Monday to Friday, 10 p.m. onwards. We talk about cryptocurrencies, AI, politics, regulations, pretty much everything you need to know regarding the world going into a digital future and everything else that's happening around you. But welcome to the CMF Live. Good to see you, Michael. Let's go. Hi, CMF Group. Sajid, good to see you as well. How you doing? How you been, brother? Greetings, Miles and CMF. Hope all is well. Ray, good to see you as well, brother. How you doing? How you been? Just liked and retweeted on X. Thank you so much, funky brother, for liking and retweeting on X. Loads of good news, but the market is so frustrating. Yes, I agree. Good evening, my mentor, Miles, and the CMF members. I hope that you had a good day. Scott, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Orphan, good to see you as well. How you doing? How you been? Miles, I'm glad you are feeling better and have you in my daily prayers right now. Thank you so much, Scott, for that. Honestly, thank you so much to everybody who has me in their prayers, during whatever is happening to me. Now, quite a bit of news to go through on tonight's slide. There's a lot of things happening in the digital world that everybody should be fully aware about regarding regulations, legislations, and other things that are happening around the world, and even geopolitical tensions and trade talks. But the first news we're going to cover on tonight's live is the Senate passing something, essentially the Senate passing something quite massive for the market space, but crypto wasn't mentioned, neither was other things, and I'll go through right now, but I just got a comment inside the comment section I just want to go through right now. Bro, what's wrong with the world, bro? A bottle of water, or I don't know what that means. Why so many YouTubers doing crypto and it ends up like scams and failing? Why are so many YouTubers doing crypto and it ends up like scams and failing? Majority of crypto projects are scams. That might be major news to you if you're a beginner inside the crypto space, but it's always best inside the crypto space to stick to projects that have a foundation, so a company's behind it, or essentially they have licensings, or they have essentially contracts within place, like with IBM, HSBC Bank, Standard Chartered Bank, and so on and so on. So preferably, if you don't want to get scammed inside the crypto space, stick to legitimate projects. If you get scammed inside the crypto space, it was because you were trying to look for easy money, and whenever you try to look for easy money in life, it will always go south. So that is your answer to essentially crypto YouTubers who end up like scams and failing, is because they don't go for legitimate projects. And also some influencers promote scam projects. I don't promote crypto projects, and I've never promoted crypto projects. I just share the news. That's all I do. Now, welcome to the CMF Live, Starboy. Yes, yes, sir. Miles, let's go. David, good to see you. How you doing? How you been? Now, the Senate is what we'll talk about next. Could Link2Go be a scam? Yes, Link2Go was a scam. Regarding Link2Go, when it was first announced they were selling Ripple shares, I told everybody in my own group to stay away from Link2Go because the idea of buying Ripple stock when Ripple doesn't have an IPO is just stupid. So that's why I said at that time to everybody to stay away from Link2Go. And a lot of people lost a lot of money on Link2Go, and Link2Go does seem to be, getting sued from every angle. But yeah, I told a long time ago to everyone, stay away from Link2Go, because the idea of buying a pre-stock of a company that doesn't have an IPO and doesn't want to do an IPO is just stupid, buying their stock. I said this a long time ago. Now, but yes, could it be a scam? Link2Go was a scam. Any thoughts on why Arthur Bitro has come out from the cold? Regarding one of Ripple's essentially co-founders coming out of nowhere, suddenly just appearing, he didn't leave much of a hint of why he's reappeared into the scene all of a sudden. But you could say timing is interesting. We're in the stage where crypto is, connecting to the traditional financial space. You could say right now, there's a lot of things happening on that aspect regarding the amount of banks worldwide that are joining the crypto space. The world, a lot of countries are going through legislation processes right now for cryptocurrency, stablecoin legislation. There's a lot of things happening of the blockchain space connecting to the banking world, to the finance world, to traditional world. So that could be essentially why this man has decided to reappear into the scene. I think it's good news that he has essentially appeared into the scene, to be fairly honest. Shelly says, I was one of those who was considering it and listened to you, thank God. Let's go, Shelly. Shelly's referring to Link2Go when I told everyone to stay away from Link2Go about 2 years ago. Now, Good on you, Shelly, for listening, and everybody else that listened to me as well. Hi, Miles and family. Alex, good to see you as well. How you doing? How you been? Now, the Senate. As you may know, the Senate today passed a bill 51 to 50. And apparently there was going to be mentions of crypto inside the bill, or regarding crypto taxes inside the bill. And there wasn't. Now, why did the crypto space get a hint that there may have been some sort of crypto references in the crypto tax bill? No, not the crypto tax bill, but essentially a tax cut bill. Why did everybody get, some sort of a hint that there's going to be some sort of mentions of crypto or even Bitcoin inside of this bill? It's because of Senator Cynthia Luminous, the Bitcoin maxi advocate, was telling people for the longest time that essentially, Bitcoin is going to be mentioned inside of this big, beautiful bill that's just been passed. And it wasn't. Crypto didn't react in a good way, let's just say. So here it is. Trump's big, beautiful bill passed the Senate, but without any provisions related to crypto industries. Trump's budget bill passed the Senate, but the crypto industry has little to celebrate. On essentially today, the US Senate passed the sweeping budget bill with a razor-thin margin. Yet, despite Donald Trump's past vocal support for crypto industries, the bill had no crypto-related provisions. And the only reason the crypto industry thought that it may have is because, again, of Senator Cynthia Luminous. Especially regarding there was no mentions of digital assets, Bitcoin, Ethereum, crypto, Web3, or blockchain anywhere in the over 1,000-page bill. This is despite specific essentially efforts by pro-crypto senators to include tax breaks for their industry bill. Notably, Senator Cynthia Luminous, essentially a vocal advocate for, it says digital assets, but she's a very vocal advocate for Bitcoin, argued for essentially changing the tax code for crypto mining and staking. She argued that essentially Bitcoin miners are stake and essentially people who stake were taxed twice. Once essentially they received their block rewards, and then again when they essentially decided to sell them. Currently, the IRS classifies profits from crypto mining and staking as income, which is taxed essentially at a fair market value at the time of receiving them. And once essentially the Bitcoin miners sell their crypto, they have to report the capital gains and pay a flat rate of these essentially profits. While these taxes and essentially, while the taxes don't strictly entail double taxation, miners and stakers complain that the system is overly essentially burdensome, and namely they have to pay taxes before realizing any profits or even before converting any crypto to fiat. Senator Cynthia Luminous also advocated for tax exemptions for small crypto transactions, or a D- essentially rule. These are often essentially referred to transactions that involve small payments, essentially small payments for gas fees, small transfers, or etc. on the blockchain space. While transactions don't generate much income, they are a significant burden when it comes to tax reporting. The crypto industry was one of the biggest donors inside of November's 2024 election. They supported candidates from both parties, raising over $190 million for their campaigns. It's true. Look, there was a big, beautiful bill passed today inside the Senate at a 51 to 50 vote rate, and people were expecting essentially to crypto, or because the Senator Cynthia Luminous has been advocating for this bill as well, that Bitcoin at least would have been mentioned in the bill, and unfortunately it wasn't, and crypto didn't react very positive to it. But that's not another reason. Essentially, that's not the main reason why the crypto market is down. The main reason is mainly to do with manipulation. Now, other things that are happening right now inside the news is this, not off the table. Fed comment could trigger Bitcoin altcoin rally. So it's not all doom and gloom. There is actually essentially a good positive side to everything that's going on right now around us also inside the crypto space. Bitcoin and altcoin prices could stage essentially a very strong rally in July after a surprise statement from Jerome Powell, the Federal Reserve Chairman. In a statement, Jerome Powell changed his tune on when the Fed could start essentially cutting interest rates. For the first time this year, he did not rule out slashing rates as soon as July meeting. He said, I really can't say. It's going to depend on the date. And we are going to be meeting essentially we're going to be doing meeting by meeting. I wouldn't take any meeting off the table or essentially directly on the table. It's going to depend on how the data is going to fall. In his testimony to Congress last week, Jerome Powell insisted that the bank would maintain a wait-and-see approach before hiking interest rates. He and other officials are assessing the impact of Donald Trump's tariffs on interest rates. Some Federal Reserve officials have supported a July interest rate cut. In a recent statement also, In a recent statement also, Christopher Waller and Michelle Bowman have insisted that Trump's tariffs essentially were having a limited impact on the inflation and that July cut would be necessary. Still, traders on the futures essentially markets are unconvinced that the Fed will cut the essentially rates in July. Polymarket data pegs at a July cut at 17% and no change at 82%. The essentially CME Fed Watch tool puts the odds of a cut just at 19.1%. A July rate cut would be highly bullish for the crypto space because it will reduce the opportunity cost of holding non-yielding assets. It would also increase risk appetite among investors, as happened during COVID-19, essentially during the pandemic, when the banks essentially brought in rates to zero. The rate could essentially and would also concede with passing of Donald Trump's big beautiful bill, which introduces some tax cuts and reduces regulations. Some of the money saved in the taxes will be invested in cryptocurrencies. While a July rate cut is not generated, most analysts anticipate one in September, and the odds are standing at over 75% of a rate cut happening in September. In a statement this week, Goldman Sachs predicted that 3 cuts this year, while JP Morgan, essentially Morgan Stanley, sees 7 at least happening from now until 2026. Bitcoin and altcoins have other catalysts that will push them higher this year also. For example, Bitcoin's demand continues rising with their spot ETF inflows nearing essentially the $50 billion marker right now. More companies like Coinbase, Block, GameStop, Metaplanet continue to also accumulate Bitcoin. Additionally, the Securities and Exchange Commission, SEC, is expected to approve several altcoin ETFs later this year as well. And the odds of an XRP ETF of being approved this year have jumped to 85%, which we're going to talk about a little bit more tonight's live as well. While Solana essentially has soared to 99%, ETF approvals will likely lead to even more inflows happening among investors. Further, regulatory clarity inside the crypto industry is also happening, which will attract more investors. For example, the US Senate has also passed the Genius Act, which focuses on stablecoin industries. Look, it's not just all doom and gloom essentially inside the crypto space regarding what's happening with the trade situation or geopolitical situation that's happening around the world. There is actually some positivity happening inside the crypto space right now. With the amount of inflows that are still coming into the ETFs, the high rate of ETFs being passed, which we're going to talk a little bit later on tonight's live also, and regarding the essentially the Fed talking about rate cuts and that the possibility of a rate cut happening in July. If it doesn't happen in July, they're saying September. But between July to September, when this rate cut happens from Jerome Powell, it's going to create some sort of a rocket inside the crypto space because we have been held back so long by Jerome Powell that it's just getting ridiculous. That if he doesn't do a rate cut, throw him at the door. Honestly, Jerome Powell needs to be fired if this man doesn't do any rate cuts. Now, BlackRock. Sorry about that. It's really hot in London right now. BlackRock's IBIT ETF essentially has brought in to the table $3.85 billion of Bitcoin in June. It now holds roughly about $75 billion in Bitcoin. So you might see the market is essentially trending downwards, but there is actually still money coming in from institutions towards the ETF space right now. Wrapping up the month with an inflow of $112.32 million on June 30th. BlackRock's iShares Bitcoin Trust IBIT essentially ETF has acquired approximately $3.85 billion worth of Bitcoin in June 2025. The ETF has also set a record with essentially marking a 15-day inflow in all trading sessions from 9th of June onwards. Data from Soso Value shows that the past month's glorious inflows have pushed IBIT's total asset value to $75 billion. The revelation underscores a essentially systematic shift in traditional finance embracing of the digital asset space. This surge in IBIT ETF traction aligns with BlackRock's dominant market presence in its partnership with Coinbase as a secure custodian. The issuance essentially has integrated Coinbase's Aladdin risk management software with Coinbase Prime to enhance their trading, custody, reporting services for their ETFs. The June hold, which amounts to approximately 36,300 at a current price of approximately 106,000 Bitcoin, $106,000 per Bitcoin, reflects growing demand for Bitcoin's exposure through essentially ETPs. Also, notably, BlackRock's IBET has seen consistent inflows compared to any other Bitcoin ETF, with June's acquisition marking a 5% surge to its holdings. This move also follows a continuously increasing demand for Bitcoin among traditional investors. The total trading volume in Bitcoin ETFs now essentially also accounts for a substantial share of the trading essentially volume compared to that of centralized exchanges. Despite this massive buy, Bitcoin's price has struggled to surpass $110,000 right now, prompting speculation of buyer exhaustion. Just to point it out again, yes, the markets are down slightly, you could say, but on the other side, the institutions are buying. So that should be your indication of where we're heading towards this market space. So the markets might be red, but the institutions are buying right now, because we are at very, very crucial times. We're at the part where it's legislations, which equals to utility. Regulations equals to utility. That's the stage we're at right now. Regulations. We're at the stage of regulations passing for the crypto space. And once that happens, it means utility. Hence why institutions are buying right now. Now, China. Yesterday, I talked about on tonight's live regarding Europe having discussions in Washington this week regarding tariffs, and that Europe is going to come to some sort of a conclusion with Trump or Trump's administration regarding a 10% universal tariff. Europe and essentially Trump coming together and sealing the deal once and for all regarding tariffs is a positive thing for the stock market and the crypto market space. Now, China is about to be having essentially a discussion with the United States of America as well. So here it is. China to discuss tariffs with the US at the WTO. China's expressed readiness to discuss tariffs and subsidizes with the United States at the World Trade Organization, which is the WTO. According to a senior delegate, the dialogue could ease international trade tensions and affect global economic relations. The announcement follows China's acknowledgement of US concerns at the WTO. A senior delegate indicated that China's openness to reform discussions on tariffs and industry essentially policies and its essentially status as a developing country. The US is advocating changes at the WTO, focusing on privileges for essentially developing countries, and China's position as a large economy under this category is a continuous issue. Both parties aim to address reform needs ahead of their 2026 ministerial essentially meetings. Official spokespersons, China's delegation to the WTO said, China had heard every word the US had to say at the WTO about its trade practices and is open to discussing these tariffs and essentially industrial policies and some benefits it gains from its developing country status as a part of a broader conversation on reform essentially ahead of the 2026 ministerial meetings in Cameroon. Market reactions remain speculative right now, as the dialogue is essentially consultative, and the potential tariff reductions could positively influence the macroeconomic essentially indicators impacting international trade right now in the corridors. Yet, essentially, direct outcomes on funding allocations remain very unclear. Cryptocurrencies, including Bitcoin, Ethereum, and USDC, and other cryptocurrencies, may experience changes and volatility parallel to geopolitical shifts, though no substantial essentially on-chain impact has been documented at this very stage and moment in time. And historical data shows that trade de-escalation, like tariff pauses in May 2025, can cause temporary market optimism. However, lasting essentially impacts require more structural economic adjustments, and potential financial and regulatory outcomes depend on the progress of these complex negotiations that are going to be going on. At the 2026 essential ministerial meeting is a timeline for potential reforms with past instances in offering limited long-term essential stability at market structures. China and the US coming together and having some sort of a deal with each other regarding tariffs could actually be an extremely positive thing for the crypto space. It'll be a very extremely positive thing for the stock market, which will be very positive for the crypto market, because Bitcoin still does perform like a tech stock, which means if tech stocks are doing very well essentially inside the stock market, then Bitcoin is doing well, and so is the rest of the crypto space. That's only, again, because we don't have regulations. If we have regulations, we can have utility, which means we can depart from Bitcoin's footsteps. But for the time being, we're stuck behind the train right now, behind the Bitcoin train, let's just say. But other than that, having essentially China and US coming together, doing a deal, just getting it over with regarding tariffs, brilliant. Because every time they do a tariff pause, the crypto market reacts in a positive way. So imagine if they do a tariff end, they come to a conclusion. the crypto market is going to react in a very extremely in a very positive way. And also we have essentially the EU and the US having conversations in Washington this week regarding their tariff situations as well. So could this be the endings of this tariff battle that's been going on? Now, SEC is what we're going to talk about next. We know for a fact that the SEC is trying their best since Gary Gensler has left regarding being extremely positive for the crypto space. I mean, they dropped cases left, right, and center. I mean, we do have that one particular case regarding Ripple versus the SEC, but that will go away anyways. The SEC and Ripple are both on the same page, but the judge wasn't. But that could just be left to timing. But putting that to one side, we know for a fact the SEC has been extremely positive for the crypto space regarding dropping cases and regarding the ETFs, you could say. Well, the SEC has decided to create something universal for ETFs. SEC develops universal listing standards for crypto ETFs. Eleanor Terrett reports that the US Securities and Exchange Commission is working with trading platforms to create a universal listing standard for cryptocurrency ETFs. Apparently, the SEC is trying to make crypto ETFs process a lot more quicker, you could say, in a sense. So here it is. With trading platforms to create a universal listing standard for cryptocurrency ETFs, this initiative aims to streamline the approval process for these financial products. The proposed listing standard would simplify the regulatory process by enabling token issuers to submit an S1 registration statement, directly bypassing the lengthy 19b4 process, and this could potentially increase liquidity and even attract more institutional investments. The US Securities and Exchange Commission, SEC, is at their essentially early stages of developing this universal listing standard for cryptocurrency ETFs. Eleanor Terrett, a respected crypto journalist, broke the news about the SEC's collaboration with various trading platforms to streamline ETF listings. A key change involves replacing the current 19b4 application with an S1 registration statement, allowing listings after a 75-period-day review. This essentially plan aims to expedite the listing process, benefiting the market by increasing liquidity and even potentially attracting more institutional interest. The crypto community has responded positively, hoping essentially for increased accessibility and trust in the markets, even though essentially the SEC has not issued an official statement and the leadership essentially comments remain absent. Market enthusiasm is evident at this essentially regulatory clarity, and it seems even closer. The SEC's initiative could trigger wider acceptance and even adoption of crypto ETFs, facilitating more diversified investment strategies for institutional players. The team's analysis suggests that these changes might help in bridging traditional finance with the blockchain ecosystem, strengthening the crypto space. This is incredible news coming out of the SEC, and the crypto market should be reacting in a positive way, but it isn't. It's just because of slight manipulation. Give it 2-3 days, we're going to go back up. So, SEC is creating essentially a new plan on developing a universal listing standard for crypto ETFs to make the process a lot more faster, a lot more easier, and even help institutions come to the table for crypto ETFs. It's extremely positive news, but the market isn't reacting to it. Now, UniCredit is what we're going to be talking about next. But before we talk about UniCredit, let's go inside the comment section first, and then we'll go straight into the next news on tonight's live. As I said previously, this is live, which means if you do have any questions or statements to make, put it down inside the comment section. I'll be more than happy to help you out. So let's go inside the comment section first before we go through the next news, which is regarding a bank that's just came forward to provide credit through ETFs. Now, let's go through the comment section first, and then go straight to the next news. Alex says, "Hi, Miles and family. Good to see you, Alex. How you doing? How you been?" Don't know what that means. Quite a few weirdos today inside the comment section. Even Miles and CMF, Pierce, good to see you as well. How you doing? How you been? Hello, Miles and CMF, Carol, good to see you as well. How you doing? How you been? Hello, Miles and CMF, Peeps, Semper, good to see you as well. How you doing? How you been? Hi, Miles and CMF, Peg, good to see you as well. How you doing? How you been? Markets are waiting on tariffs. Markets are waiting on tariffs. I'll be very honest. They're waiting for the European tariffs because the Chinese tariffs are going to take a little bit of time. It's so hot right now in London that You just get dehydrated very quickly. It's like being in the Sahara Desert right now if you live in London. How is XRP manipulated so much, and when will it stop? Well, XRP's manipulation is going to come to an end when essentially this case goes away. So we're not that far off, John. Now, UniCredit. UniCredit Bank launches a Bitcoin ETF tied to investment products. Here it is. UniCredit Bank has just rolled out a 5-year investment product for Italian professional clients. This product is connected to BlackRock's iShares Bitcoin Trust ETF, offering capital protection throughout the investment period. This collaboration essentially involves UniCredit's SPA and BlackRock essentially Inc., recognized as a pivotal step in emerging traditional finance with cryptocurrency investment options. They said, we are seeing an increasing interest from professional investors in instruments tied to emerging asset classes such as cryptocurrencies. With this product, we offer our professional clients a essentially distinctive solution and the first of its kind in Italy. Chico Di, essentially the head of the group investment product solutions and equity and credit sales at Trading UniCredit, said, there's an increased interest in crypto-linked products among institutional investors, reflecting a very broader essentially trend in traditional finance. And UniCredit product is a notable development for major European banks, and financial implications are significant as the structure essentially provides secure exposure to Bitcoin's performance. Prominents see it as an important step towards crypto mainstream acceptance, and in the past, Bitcoin's ETF launches have triggered allocations within the institutional sector. Essentially, similar products had limited uptake due to their absence of their capital essential protection. With future now addressed by UniCredit, the expectation is essentially an increased institutional foothold in cryptocurrencies, aligning essentially with past trends where secure investment options led to broader adoption, and essentially Bitcoin's role as an underlying asset remains crucial to its potential success. So we know for a fact that in Wall Street right now, they are offering Bitcoin loans against your Bitcoin ETFs for those high-profile investors. Well, an Italian company has came forward essentially to offer Bitcoin protection services regarding anybody that owns an ETF for the European market space. It's just another indication of the blockchain space connecting to the traditional financial space. Day by day, that's just what's happening right now inside the crypto space. Every day, we're getting announcements of another bank joining the crypto space, or a broker joining the crypto space, or a VC company joining the crypto space, or essentially an institutional company joining the crypto space, or a reserve is happening for a particular company inside the crypto space. There's just something happening every day that's just connecting the traditional market space to the crypto space. These are indications of the train is moving. Now, what we're going to be talking about next, moving on essentially from this Italian company that's offering essentially financial services through the crypto space, through BlackRock to the European market space, we're going to be talking about next about the crypto PAC-backed candidate. If you weren't aware of how the Republicans had a very, very clean sweep during Trump's presidency, it was because of the crypto space. The crypto space created some sort of, you could say, crypto wallets where they essentially funded potential candidates to win a race. Now, they couldn't fund them directly because that could be illegal. Instead, they funded their campaigns, which led to essentially a clean sweep of Republicans happening during Trump's presidency. And this happened because of Ripple, Coinbase, and a few of the companies that funded these campaigns. Well, they are still funding them right now. The crypto PACs that are essentially been funding all these Republicans that have won essentially as a clean sweep, they're still funding it. And by the way, Ripple has pledged, so has Coinbase, to keep on funding politicians through 2026 to 2027 to 2028 and so on. Because that's just the only way to do it. If you want to get legislations passed, if you want to get ahead of the game, you've got to have a few, essentially, you've got to have a few politicians in your back pocket. So here is another pro-crypto politician that has just passed because of the crypto space. Crypto PAC-backed candidate wins Virginia's primary for essentially a vacant House seat. James, a Democratic candidate seeking to replace the late Representative Gary from Virginia's 11th Congressional District, won a party primary after a cryptocurrency-backed Political Action Committee PAC spent more than $1 million to support his race. Democrats in Virginia's 11th district held a firehouse primary to decide on a possible replacement for Connolly after his death while in office. A special essential election to determine who will represent him in the district will be held on September 9th. James beat out other candidates to become the Democratic nominee for the House seat, and the cryptocurrency industry may have placed him in this role. Given reports of media buys by the essentially Protect Progress PAC, and according to Federal Election Commission filings, the crypto community, have spent more than $1 million to support James to his political seat. Protect Progress is an affiliate of the Fair Share PAC. The Fair Share PAC is also getting fundings from Ripple and Coinbase. The committee primarily funded by contributions from cryptocurrency companies like Coinbase and Ripple, likely played a significant role essentially in the 2024 US federal elections after spending more than $130 million on media support to what essentially group considered a pro-crypto candidates or opposed anti-crypto ones. We were proud to support a candidate who stood strong in the face of a baseless attacks and never wavered essentially in his commitments to innovation and economic opportunities. A Fair Share spokesperson told Cointelegraph on James's primary win. Voters saw through these seamers essentially and made it clear that the support for crypto and blockchain is not just about good policy, but winning a political issue across party lines. The involvement in Virginia's election was one of the Fair Share's essentially latest expeditions following special elections in the April, with 2 Florida House seats in which the PAC affiliate essentially defended American jobs, spent more than $1.5 million, and crypto supporters connected to some companies contributed to a combined $4,000 for candidates in New Jersey's essentially primaries in June. Cointelegraph was unable to locate any reports suggesting the explosion by crypto-backed PACs. As of January's Fair Share report, it held more than $160 million in cash on hand to support candidates committed to advancing crypto innovation and responsible essential regulations in 2026 midterms. The PAC may essentially be looking to widen the gap between federal lawmakers who generally support crypto policies and those who oppose them. The advocacy group Stand With Crypto reported that 270 pro-crypto candidates won seats in the U.S. essentially House of Representatives and in the Senate and the 2024 election out of the 535 seats in both essentially chambers in the current session of the U.S. Congress. And lawmakers in the Senate have passed stablecoin legislations and are in the process of drafting a digital asset market structure bill. It's true. The only reason that we're getting essentially a stablecoin bill being passed right now in the Senate is because of Ripple and Coinbase. Honestly, if you didn't know that and you're inside the crypto space, and by the way, if you're somebody that criticizes Ripple for their movements or XRP for their movements, and you're a Bitcoin maxi, let's just say, did you know that Ripple is one of the main reasons, and so is Coinbase one of the main reasons of why we're getting essentially stablecoin bills or essentially other bills related to cryptocurrencies being looked into or passed by the Senate is because of companies like Ripple and Coinbase who are still funding politicians' campaigns till now and continuing forward for every year to come. It's because of Ripple and Coinbase that we have pro-crypto politicians that are looking into crypto bills. If you didn't know that, now you know. So if you're somebody out there that does criticize Ripple or XRP, well, you got to thank Ripple and XRP because they're the ones that are opening the gates for you. Connecticut is what we're going to be talking about next. Now, we have all this pro-crypto-ness happening essentially and pro this and pro that, but there's one thing happening that many states in America are trying to pass some sort of a reserve crypto bill. Some are trying to pass a Bitcoin bill, and some are trying to pass a crypto reserve bill. And one particular state has decided to go completely against it. Connecticut enacts a ban on state Bitcoin investments. Connecticut Governor Ned has signed a legislation prohibiting the state from creating a Bitcoin reserve or investing in digital assets, marking a historic decision in U.S. cryptocurrency regulations. I'm guessing Connecticut has decided to stay broke because that's just what you're saying when you don't allow your citizens in your state essentially to even look towards cryptocurrencies because the state itself has banned cryptocurrencies as a reserve, which gives a bad image to people that live in that particular state. The ban emphasizes a cautious approach to cryptocurrencies at a state level, contrasting sharply with more crypto-friendly policies elsewhere, impacting a wider state government crypto strategies. Governor Ned officially signed a House Bill 7082 banning Connecticut State from investing in Bitcoin and other digital assets. This unpredicted move essentially indicates a major shift away from the pro-crypto policies seen in other states. For example, Texas, very pro-crypto, Ohio, pro-crypto, Idaho, pro-crypto. I mean, the list goes on. Every American state is pro-crypto, trying to apply for some sort of a crypto reserve. Connecticut, not so much. It's just banning it right out. The legislation ensures that Connecticut government abstains from holding or investing in cryptocurrencies, and this includes all digital assets and explicitly mentions Bitcoin, affecting state-level financial strategies. As Governor essentially noted, this legislation marks a significant regulatory stance that differentiates our state from those pursuing more crypto-positive policies. He's very proud, essentially, about his decision. He's saying that we know other American states, or every American state, is applying for some sort of crypto policies, but we don't want to. Impact resonates across government and industry circles, dramatically limiting state-level participation in digital asset markets. Connecticut essential restraints might signal similar actions from risk-averse states. This decision is notably restrictive, repositioning Connecticut's institutional essentially interactions with crypto markets. This places the state at odds with those implementing or considering essentially crypto investment policies. Connecticut's new essentially law dampens its fintech appeal as crypto-friendly states attract blockchain essentially businesses. This restrictive stance implies and loses in potential innovation growth within the state's financial ecosystem. There is another reason why some particular states will decide, or their governors will decide, not to go towards digital assets. And it's not because they care about their essentially state. Let's just be fairly honest. Governments, politicians, senators, these types of people, they don't care about the average Joe. Even though they pretend they care about the average Joe to get votes, the reality of it is politicians couldn't care less about you unless it's voting season. Everybody should know that. So if this governor is essentially saying no to crypto assets in America, there's two reasons behind it. One, he doesn't understand it and he doesn't want to understand it. Or two, he doesn't know how to wash his money in a digital world because he's a politician. Politicians get paid under the table all the time. I'll give you an example that just came out today. The Medicare situation inside the United States. The US has unveiled one of the biggest, essentially, fraud situations when it comes to the health department today. And a lot of people have been arrested, and a lot of money has been found. And senators were involved of scamming American citizens out of, essentially, their tax-paying dollars for their Medicare. And then we know one particular senator, essentially, who has been advocating for Medicare to stay and blamed Dodge for cutting Medicare, essentially. And that was, as we all know, Senator Elizabeth Warren. The other person that was supporting Medicare to stay and was against Elon Musk and was protesting against Elon Musk was essentially the other moron, which is not Elizabeth. Elizabeth Warren is one moron, but the other moron was... The name is on top of my head, but I can't remember it. But we all know for a fact who the two morons are. One of them is Elizabeth Warren, and the other one is the other senator who's bringing in a lot of money, and that doesn't add up regarding her wages and her portfolio. But that's just how essentially politicians, governors, and senators are. So one of the biggest fraud cases that came out today proves my point on regarding politicians, senators, governors. They get a lot of dodgy money. And I'm guessing Connecticut's governor doesn't know how to wash his money in a digital world. So therefore, he's decided to just say no to cryptocurrencies, no to digital currencies in general in Connecticut. It's the only conclusion anybody could come to why a governor would essentially reject the idea. Either he doesn't understand it and doesn't want to understand it, which is, you could say, plausible, but the other one is more realistic, which is he doesn't know how to wash his money. Nancy Pelosi, thank you so much, Susie, for that. That's the other moron. Susie, thank you so much. Nancy Pelosi. Nancy Pelosi and Senator Elizabeth Warren both were protesting against Elon Musk regarding the whole Doge situation, when Doge was looking into Medicare and some other situations and so on. And Nancy Pelosi and Senator Elizabeth Warren were doing campaigns on the street protesting against Elon Musk for cutting Medicare and so on. Well, now we know why Senator Elizabeth Warren and Nancy Pelosi were trying to campaign against Elon Musk for Medicare, because Medicare was an absolute complete fraud. They spent billions of dollars of taxpayer money on nothing. There was one man who was charged 10,000 out of the hundreds and thousands of millions of patients. I'll take out one case. There was one man that was charged $10,000 for urine, essentially a component for urine, and he was charged $10,000 for multitude of those essentially applications, which he never used or he never even needed, but they still charged him that amount of money. Medicare has been charging a tremendous amount of money at essentially taxpayers' cost inside the United States. It was a complete fraud organization. And there were so many politicians involved, so many senators involved, so many governors involved. It was a ridiculous. A lot of people are going to be arrested right now. As the days go by, a lot of people should be arrested. Now, moving on from Connecticut's stupid idea of not going to cryptocurrencies to China. We've always talked about essentially quantum computing for the longest time. We've always talked about quantum computing, and everybody inside the crypto space, there is one side of the crypto space that thinks that quantum computing could essentially take over the crypto space and decrypt everything to do with it. The other side of crypto space is 50-50 on the idea. Well, we have actually got to a stage where Chinese quantum computing has had a breakthrough. And I've said this in the past, and I'll say it again. Quantum computing can actually be used in a beneficial way to advance blockchain and AI technology, but also in the wrong hands, it could be a bad thing for certain blockchain projects, not all. So here it is. The Chinese quantum breakthrough test encryption foundation. Bitcoin's impact uncertain so far. Researchers at Shanghai University in China reported breaking a small RSA encryption key using quantum computing. They factored a 22-bit RSA key. This achievement demonstrates the progress in applying quantum technology to the cryptography through current security standards remain intact. RSA encryption protects sensitive data like financial transactions, and it relies on essentially the immense difficulties of factoring large numbers into essentially prime numbers using traditional computers. The Shanghai essentially team converted this factoring problem into essentially conventional organization challenge, and they solved it using a D-Wave system, quantum essentially annealing process. This machine employed over 5,000 physical qubits, the basic units of a quantum essential information. The broken 22-bit key is much smaller than the 2048-bit keys commonly used today. Therefore, existing RSA-based systems are not immediately threatened by quantum computing so far, and the computational challenges skills and the key size. However, the experiment signals progress towards methods that could one day threaten current encryptions. Quantum computing is getting to a stage where it can eventually threaten the traditional financial system we have. The next step will be for quantum computing to be able to affect the crypto space, but not every blockchain will be affected, to point that out. And Bitcoin does not use, obviously, an RSA. It secures transactions and private keys using epileptic essentially curved digital signature algorithm, and the SHA 256 essentially a hash function. These systems rely on different essentially mathematical problems than RSA. Views on the timeline for a practical quantum threat vary. Adam Back, a Bitcoin developer and Blockstream founder, suggests practical danger might be 1 or 2 decades away. Other essentially experts monitoring quantum progress warn the risk could materialize faster than expected. A late May report from Google Quantum AI heightened broader concerns. Google researchers essentially indicated that future essentially quantum attacks could threaten not only RSA but also epileptic curve different Hellman's encryptions. The HCDH shares mathematical foundations with Bitcoin's EC, essentially DSAs. Both depend on difficulty of solving epileptic essentially curves and the algorithm problems. Google's analysis suggests that breaking a 2048-bit RSA key might now require fewer than million physical qubits. Previous estimates from 2019 suggested 20 million. This reduction stems from better algorithms and improved essentially error corrections techniques, and logical qubits formed from many errors essentially corrected physical qubits are now essentially functional units for such complex tasks. And this progress essentially underscores a known risk and a whole risk now of decrypt later. Attacks and adversaries could collect encrypted data today, hoping to decrypt it when sufficiently powerful quantum computers exist. While Bitcoin's specific algorithms aren't broken and the underlying mathematical assumptions face a potential long-term challenge, the Shanghai experiment and Google's analysis serve as a reminder that crypto's defenses must continue to evolve. I said this also a while ago as well. As obviously we're getting essentially into this quantum computing world and quantum computing is advancing, on the other side, crypto is also advancing as well when it comes to security too. You know, Bitcoin developers are obviously working on Bitcoin's chain, but then we have essentially Ripple, you know, making sure the XRP ledger is extremely secure. Cardano is making sure essentially their chain is secure. The AVAX Foundation is making sure that AVAX is secure as we go along. So yes, quantum computing is advancing on one side, but so are blockchains, and they're getting better at security, to be fairly honest, as they go along. But quantum computing is getting closer. According to Bitcoin developers, we're 2 decades away from quantum computing being able to hack Bitcoin. According to Google, we're not that far off being able to hack Bitcoin. Now, this is when essentially it's better when there's a company behind the blockchain, like Ripple's behind the XRP ledger. It works out better now because you can see that Ripple would obviously care about fixing their chain to make sure extremely secure going into a quantum computing world. Same goes essentially for Solana's foundation, Cardano's foundation, essentially AVAX foundation, so on and so on. Now, DDC is what we're going to talk about next. But if you're somebody that's worrying about security of your wallets, we're still quite a bit far off from quantum computing. But Shanghai is, you know, moving quite fast. You could say China is moving faster than the rest. Now, DDC secures $528 million for its corporate Bitcoin accumulation strategy. Another company has came forward to create some sort of a Bitcoin reserve following MicroStrategy's footsteps. DDC Enterprise, best known for its essentially Asian food brands, has entered the big leagues. With a $500 million war chest and a heavyweight backers, the company is making an audacious play to dominate crypto essentially corporate Bitcoin holdings. In a press release that came out today on the New York Stock Exchange listed, DDC Enterprise has announced the initial closing of its $528 million capital raise, backed by institutional heavyweights including Anderson Funds, Aminico Brands, Connecticut Essential Capital, and others. The financing marks one of the largest Bitcoin essentially dedicated raises by a publicly traded essentially company and includes a mix of convertible notes and private placements and essentially equity lines of credit, all embarked by aggressive Bitcoin essentially accumulation. The move puts DDC at a radically different path from the consumer-facing companies. It also essentially cements its position as one of the few public firms outside of tech or corporate or essentially crypto sectors to aggressively reconstruct around Bitcoin. According to the press release, the initial closing of DDC $528 million financing package includes $26 million of PEEP investment for crypto native institutions like Aminico Brands and Connecticut Essential Capital, and $25 million essentially from convertible notes, and so on. Perhaps most essentially significant is the $200 million equity line of credit, given DDC's dry powder to accumulate Bitcoin during these market dips. So another company has just came forward following MicroStrategy's footsteps to acquire Bitcoin at large amounts. They do have quite a heavy wallet, $528 million to spend. Are they going to spend $528 million acquiring Bitcoin? No. They're going to spend 2 to 3 million, 5 million, 10 million as the time goes by. But still, it's a positive note for the crypto space, to be fairly honest. Now, moving on from essentially that one company that just came forward to acquire Bitcoin following MicroStrategy's footsteps to South Korea. Because South Korea has moved towards a blockchain payments with AVAX. A travel wallet company has came forward and partnered with AVAX. Travel Wallet, a platform focused on foreign exchange solutions, is joining forces with Avalanche to develop a Korean won-pegged stablecoin designed for both domestic use and international expansion. The partnership, recently formalized through a essentially MOU, aims to create more than essentially just another digital asset. The focus is on programmable money, smart contract-driven stablecoins that could power real-world payment systems and financial essential automation. The company envisions a payment architecture that blends blockchain efficiency with fiat stability, offering benefits to consumers and businesses alike. According to the project's vision, this one-based token could be used in essentially everything from retail transactions to B2B, essentially corporate settlements, integrating smoothly into both online ecosystems and point-of-sale systems in the physical world. The long-term essential ambition is to build a financial backbone that can operate across borders while staying compliant with South Korean regulations. Travel Wallet's CEO believes that this move could redefine the relationship between technology and finance, hinting at a potential for this platform to expand into broader essentially global payment systems. Meanwhile, South Korea essentially's political leadership is preparing to ground a deeper essentially crypto integration, and President Lee, who campaigned on promises of essentially liberalizing the digital asset space, has signaled support for crypto ETFs and a structured approach to stablecoin oversight. Regulatory authorities are now working together and drafting frameworks to back those plans, with updates expected later this year. Yes, South Korea is very pro-crypto, as we talked about yesterday as well, and essentially throughout the year, of all the things they're doing, that is extremely pro-crypto. But the biggest news coming out of South Korea right now, today, is that AVAX has just signed a South Korean company that's going to produce a stablecoin on AVAX's essential chain and some other features regarding smart contracts and so on and so on. So they chose AVAX as their backbone, and they're called Travel essentially wallets. Big company in South Korea. Well done to AVAX, honestly, on this move. If anybody is out there who is holding AVAX, incredible news for you as an AVAX holder, but also good news for the crypto space as well. And going back to what I said, every day we get an announcement essentially of banks, institutions, and regulations for the crypto space. We're at a very key stage for the crypto space right now. Moving on from AVAX to Grayscale. Now, all of you or some of you might have heard this news regarding Grayscale getting approved for essentially their ETF. I did say, out of all the ETFs to be approved, it's going to be Grayscale that's going to be approved first. The reason why I said Grayscale's ETF is going to be approved first is because I said Grayscale sues. I said the reason why we had a Bitcoin ETF in the first place is because Grayscale sued the SEC while Gary Gensler was in power. Well, Gary Gensler essentially was the chairman, and they won the case. And the judge said essentially that you have to give Grayscale a definite decision on why you're rejecting their ETF or approve their ETF. And I said, fast forwarding, I said, if there is going to be an ETF that's going to be passed on all the other ETFs, it's going to be Grayscale's ETF because Grayscale sues. If fast forward to today, Grayscale's GDLC fund gains ETF status following SEC approval. Grayscale's digital large cap fund, which we talked about before, has officially converted into an ETF. The SEC approved the move just before essentially July 2nd deadline. The ETF now trades on the New York Stock Exchange Acura and includes 5 leading digital assets. The SEC approved essentially Grayscale's revised S3 filing on July 1st, finalizing their GDLC's transition into an ETF. This allows the fund to offer regulated exposure to Bitcoin, Ethereum, XRP, Solana, and Cardano. The ETF structure replaces the previous OTC model and simplifies investor essentially access. The GDLC ETF tracks CoinDesk's 5 index reflecting market cap weighted performance. Grayscale confirmed that the fund meets institutional custody and compliance standards. Shares are now available through the standard brokerage accounts, and also, adding on top of that, ETF analyst James confirmed that the approval on social media, the SEC's decision reflects a growing momentum for regulated crypto funds. Grayscale's completed the conversion just hours before the regulatory deadline. The ETF improves market pricing by narrowing the gap between the NAV and essentially the share price. As of June 30th, NAV essentially per share was around $48.83, while the market price was around $47.95 for GLDC, now benefits from continuous trading and tighter spreads. The fund holds $774.8 million in assets under management. Bitcoin essentially accounts for around 80.8% of the portfolio, followed by Ethereum's 11%, XRP 4.63%, Solana 2.75%, and Cardano 0.75%. Grayscale removed private placement access and direct investors to ETFs. By moving to the New York Stock Exchange, GDLC gains liquidity and transparency. The ETF format provides daily pricing and avoids limitations of OTC trading, over-the-counter trading in other words. Institutional and retail investors can now buy shares more easily. The SEC may introduce listing standards to accelerate ETF approvals, which we talked about essentially earlier on tonight's live, regarding the SEC creating that universal standard for essentially ETF applications to be passed much more easier. But biggest news out of the GLDC situation that's just been passed is XRP ETF. XRP technically has an ETF now with a large cap fund through a Grayscale ETF. A very big indication that this case is pretty much done. Big indication that this case between the Ripple and SEC is pretty much done. If essentially the SEC approved this Grayscale ETF, that's a mixture of Bitcoin, Ethereum, Solana, and essentially Cardano and XRP, is an indication that this case is done, because they wouldn't approve an XRP ETF if the case was still ongoing, because they will use that as, you know, we can't approve it yet. But it's the biggest indication that this case is pretty much done with. And also Grayscale's ETF was bound to be accepted because Grayscale sues. Now, moving off Grayscale's GLDC and the first, pretty much you could say, essentially XRP ETF. And again, the market should be reacting in a positive way to this. The market should be reacting in a positive way to this, but it's being heavily manipulated right now. Also, the trade talk situations, which we discussed at the beginning of the live as well. Now, Warren Buffett. This is something that's going around right now regarding Warren Buffett. Warren Buffett's indicator has hit 205%. Signaling extreme market overvaluation. The Warren Buffett indicator has climbed to 205%, the highest point ever tracked. If you're wondering to yourself, what the hell is the Warren Buffett indicator? Well, the Warren Buffett indicator essentially is what predicted, you could say, the dot-com bubble situation and the 2008 financial crisis. So here it is. That figure officially tops levels seen during both the dot-com bubble situation and the 2008 financial crisis. It means that the total market cap of US stocks now sits at more than double the country's GDP, marking the most expensive valuation on record. The market hit its milestone just as trading began on the second half of 2025, and essentially Wall Street's reaction, flat. Stocks barely moved, the metrics may be screaming red, but traders seem to be holding their breath. The Dow Jones Industrial Average gained 426 points, or 1%, while the S&P 500 hovered near the flat line, and the Nasdaq essentially dropped to 0.6%. The Dow's essentially movement came after a change in essentially trading behavior, and investors dumped tech names like Microsoft and Nvidia, two of the biggest winners in Q2, and rotated into healthcare firms. While Johnson & Johnson essentially added almost 2% and others added 3%, the tech-heavy technology select sector, which gained nearly 23% last quarter, started a Q3 down with 1%. Corporate buying of Bitcoin continued to outpace ETFs for the third straight quarter. So even though Warren Buffett's indicator is ringing alarms right now that the market is overvalued and it needs to be revalued, let's just say, stock market is flat. Traders are holding their breath. Nobody's, selling drastically. Yes, there are sells happening, but there's also buys happening. But also on the other spectrum, the crypto space, there's a tremendous amount of inflow still coming in through ETFs, which means they don't care about Warren Buffett's indicator that the market is overvalued in any sort of a way. Leading the pack is MicroStrategy, still holding the largest stash among public companies, but others are catching on. Ben, for example, Chief Investment Officer at Swan Bitcoin, said the landscape is shifting. It's going to be very hard to catch Strategy's scale. They are going to be preferred to be leading the spot for institutional capital because of deep liquidity around their equity, while these smaller essentially equities are going to be really good risk returns for retail investors and smaller essential institutions that want more of the upside. Back on Wall Street, Berkshire Hathaway's stock responded to Buffett's essentially hype. A Class A share closed at around $733,000, up from essentially $4,414.44, or 0.61%. While essentially the Class B shares ended the day with around $488.70, rising a 0.60%. These gains come as Warren Buffett's indicator dominated headlines through the company's performance and had no direct link to the broader market overvaluation and their metrics value. Markets had already essentially recovered significantly after their April slide, and triggered by Trump's aggressive tariff policies. Back then, the S&P 500 flirted with the bear market territory. Since then, things have turned, and the S&P 500 has closed essentially out of Q2 with a 10.6% gain, and the Nasdaq jumped nearly 18%. Warren Buffett's indicator is sending off some sort of alarms of market overvaluation. However, the stock market doesn't care. It's actually doing pretty well for itself. And ETFs are also doing pretty well for themselves. And yes, the crypto market might be slightly on the red side, but it's not drastically on the red side in any sort of a way. There's reasons of why the market isn't screaming bells and so on. And it's because of the stage we're at. The reason why we have a tremendous amount of institutions entering the crypto space right now, even though Warren Buffett's indicators are going off, is because we're at the stage of regulations, which is a very key moment in time. Regulations means utility. Utility means a ton of money. That's what it equals to, the simplest way to put it. Cryptos have utility. Cryptos can't use utility because there's no regulation. Regulations come through, utility happens. When utility happens, liquidity happens. When liquidity happens, everybody's going to be extremely wealthy if you're positioned correctly inside the crypto space. Hence why money's still inflowing inside the market space, especially the crypto space. So yes, the markets might be on the red side, but institutions are buying. On top of that, Bloomberg sees green lights ahead for major altcoin ETFs. That's also another indication why essential institutions are buying right now and positioning themselves. Analysts James and Eric from essentially Bloomberg have raised the odds of approval for an XRP ETF by itself, not as a large market cap fund through Grayscale, XRP ETF by itself, a Solana ETF by itself, a Litecoin ETF by itself, and they're saying that these ETFs are expected to be passed at a 95% rate, and that the lights are going to go green before we essentially end 2025. This year, we're going to get an XRP ETF, a Solana ETF, and a Litecoin ETF at a 95% rate of success. By the way, James and Eric are, on the money when they say things. They were the first ones to predict the exact timeline and month and day for Bitcoin ETF, when everybody else said it's not possible. It's too high. Institutions won't buy Bitcoin at those prices. It's too expensive. Eric and James said, yes, they will. And they said the exact same date that it will happen on. But in a post essentially today, Eric and James said the analysts now view multiple altcoin ETFs, including single asset funds and multiple asset products, as likely to be passed through the SEC. And the review with the rule essentially 19B4F filings already acknowledged the decision deadlines approaching. Notably, a potential approval of Grayscale's digital large cap fund, as just been passed that we talked about today, following closely behind the odds of the Matrix are Dogecoin, Cardano, Polkadot, Hedera, and Avalanche at 90% of a chance of approval. Sui is sitting at a 60% chance of approval, while approval chances for Tron and other essential crypto projects are sitting at 50% due to their regulatory uncertainties. Three key trends are fueling optimism. SEC's engagement with issuers has intensified. Major tokens are being treated as commodities, and recent ETF amendments reflect a process similar to what happened preceding earlier with Bitcoin and Ethereum ETF approvals. If GDLC gets the green light this week, which it did, attention will turn sharply to single token ETFs, with final decisions on Solana, XRP, and others scheduled essentially for this year. Because if the SEC has approved, for example, XRP, a Solana, a Cardano ETF, alongside Bitcoin and Ethereum through that Grayscale large cap fund, then there's no reason for the SEC to reject an XRP ETF by itself if they approved an XRP ETF through that cap. If they approved the Solana through that cap, then there's no reason for them to reject the Solana ETF by itself either. So that's why they're putting a 95% chance this year. That will bring tremendous money for these assets. Also, just to point out, that's one of the other reasons why essentially institutions are lining up right now and buying digital assets when the market is in red right now. Here's to add on top of that. There was a company that I talked about essentially a month back or 2 months back regarding getting involved inside the crypto space. Well, it turns out they have now. US listed Webus International Limited has announced that it has essentially signed a senior equity credit line agreement with Ripple. The strategy of holding up to $100 million. According to the press release, the financing will be used as a part of Webus's strategy to increase its XRP reserves. Not every company around the world is trying to create a Bitcoin reserve. Some are trying to create XRP reserves. And one of them is this company with a $100 million credit line with Ripple. Webus operates as an AI-powered mobility solution provider that offers customizable luxury chauffeuring services globally. The credit line reflects Webus's confidence in XRP's base growth strategy, said CEO Nan Zing. He said, in his own words, this $100 million facility minimizes shareholder dilution by allowing us to raise capital only when needed, as we aim to accelerate our growth in North America and Asia Pacific. According to the agreement, the company will be able to use funds in tranches ranging from $250,000 to $3 million, depending on market conditions and capital needs, under the credit line that will be essentially valid for 24 months. The structure is designed to essentially be for the shareholders friendly with market-based competitive pricing and downsizing protection features. It was announced essentially that the funds to be obtained will be used for XRP supported payments, blockchain-based loyalty programs, and other global expansion initiatives. So not only is this company going to be buying XRP with their $100 million credit line and storing it, but they're also going to be building on the XRP ledger as well. So they're going to create an XRP reserve for their company and build on the XRP ledger also. Following the announcement, Webus shares rose as much as 87%. While on the other side of the spectrum, crypto space, XRP hasn't risen. This is why I'm saying sometimes there's manipulation inside the crypto space happening. Now, the faster we get regulations, the less the market can be manipulated. Always remember that. This is why regulations are a good thing. The faster we get regulations, the less chance of the market being manipulated, because we're going to go to utility, which means XRP will be used for utility purposes, which means certain people won't be able to drag its price down when it's being used 24/7 for payment services. This is why regulations are a good thing, and they need to happen ASAP, which they are, to be fairly honest. Now, also to add on top of that, Ripple's RLUSD stablecoin trading volume jumps 260% in 24 hours. Ripple's RLUSD stablecoin has just jumped 260% in 24 hours. Ripple's RLUSD stablecoin has recorded a massive spike in activity, with trading volume raising by 260.43% over the past 24 hours. According to CoinMarketCap data, the surge added $69.72 million in volume, reflecting increased interest from crypto traders during a volatile market session. As cryptocurrencies continue to experience market volatility, players are flocking to RLUSD as a solid alternative. The entire market decreased by 1.02% in the same period, and the shift has been towards more stable digital assets. The step increases RLUSD and indicates that investors are actively using it as a hedge against short-term price fluctuations. Europe-based exchanges Bitstamp counted RLUSD as one of the 3 most trusted stablecoins in June 2025. This move is evidence of the growth in stablecoin market among retail users and essentially on regulated platforms. According to Bitstamp's general manager, Linord, RLUSD is helping to unlock the real-world use case of users in the ecosystem. Last month, BitGet also announced the accessibility of RLUSD through 2 newly added trading pairs. The listings offered traders more choices on the platform, which probably contributed to the rise in the volume of the trading essentially witnessed in just the last 24 hours. The new pairs to trade demonstrate the increased interest of institutional and retail traders in stablecoin diversification. Beyond centralized essential exchanges, RLUSD has witnessed rising adoption within decentralized finance and protocols. Finance essentially recently reported that the amounts of RLUSD borrowed on its platform reached all-time highs of 49.97 million. This marks a significant milestone considering RLUSD was added to ELO's listing in May 2025. The capacity to lend, borrow, and provide RLUSD as collateral on ELO essentially demonstrates that DeFi financial growth is integrated into the token, and traders and DeFi users are showing great confidence in the asset by performing essentially financial actions that demand low volatility independently. XRP, the native token essentially of Ripple's ecosystem, is still trading at a high level above 2. Such price stability seems partially justified by the ever-increasing interest in RLUSD in both trading and DeFi contexts. The 260% increase in RLUSD's trading volume indicates a increased level of adoption in major sanctions of the cryptocurrency market, backed by major exchanges and DeFi platforms. RLUSD is poised to become one of the most powerful players in a crowded stablecoin market. It's not a lie, it's 100% truth. RLUSD, in my point of view, is technically the best stablecoin out there. It genuinely is. You know, USDT obviously has many things wrong. Let's just be fairly honest with ourselves. USDC has depegged one. RLUSD is always going to be the best place as a stablecoin to store money in, not financial wise at all. But to end on a note, which is, there is so much happening right now inside the crypto space. And if you're looking at the market space right now and the market is red and you're wondering to yourself, what the hell? Why is the market red again? Why are people selling? Just remember one thing. We are at very, very crucial times with regulations happening in many jurisdictions around the world. More institutions are joining the crypto space day by day. More institutions are creating reserves for the crypto space day by day. For example, like WeBus with XRP today. And the amount of essentially banks entering the crypto space or banks offering services to their client bases for the crypto space is tremendous. So yes, we have geopolitical tensions happening in the Middle East or anywhere else like Russia and Ukraine. Yes, we have trade talks happening essentially with Europe in Washington with Donald Trump. That's going to be happening. And China is going to be having trade talks and so on. And yes, we have slight manipulation inside the crypto space because we don't have regulations. But on the other side, we have regulations being looked into and passed by the Senate. We have institutions creating reserves. We have states creating reserves. We have jurisdictions creating regulations. All of this will add to utility later on, which is what we need inside the crypto space. And also, we have companies creating reserves, major institutions creating reserves, banks joining the crypto space and offering services to their crypto clients, and a tremendous amount of volume coming in from ETFs from institutional players. So don't just look at one side of the crypto space, look at also the other side of the crypto space with all the positiveness that is happening that just isn't being shown yet. So on that note, we have come to the endings of tonight's live. If you're watching this for the first time ever, this was the CMF Live, and it stands for Crypto Mouse Family. My name is Miles, and this was episode 324 of the CMF Live. In this live, I always talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world transforming into a digital space. And this show airs 10 p.m. London time every night, Monday to Friday. You can tune into this live. This was episode 324. Episode 325 will be tomorrow. So obviously, before we do go, let's go inside the comment section first. And obviously, let's just do a quick recap of what we talked about tonight's live. We talked about essentially RLUSD stablecoin. 260% jump is tremendous. We talked about WeBus essentially finally sealing the deal with Ripple with a $100 million credit line. We talked about Bloomberg saying 95% chance of an XRP ETF now happening, and Solana's ETF and Cardano's ETF. We also talked about Warren Buffett's indicator, which nobody's really paying attention to because the market doesn't care. We also talked about Grayscale's GLDC being approved, and we went a little bit more detail about that matter. We talked about South Korea moving towards a blockchain payment service. A company in South Korea decided to do this. We also talked about tonight's live regarding DDC, another company coming forward to create some sort of a Bitcoin reserve. We went through news regarding China's quantum computing doing some sort of breakthroughs. We went through news also regarding Connecticut thinking about doing a crypto ban, which would be a very bad idea for them. We went through news regarding the crypto pact that just backed another candidate to become a politician, and that candidate won. We also went through news regarding Union Credit, an Italian company that's offering services through BlackRock to the European market space regarding Bitcoin ETFs. We also talked about the SEC developing some sort of a universal listing standard for crypto ETFs and what that actually means and how much positivity that could bring to the table. Also regarding liquidity and institutions. We talked about China discussing their tariff plans with essentially Donald Trump with the US at the World Trade Organization. We went through news regarding BlackRock's IBIT, essentially ETF, reaching tremendous amounts of volume right now. $75 billion is what they're touching right now. We also went through news regarding the Fed, Jerome Powell's speech of where he stands regarding essentially the tax cut situation, and we talked about the Senate passing the big beautiful bill, and essentially what the big beautiful bill literally means. So those are all the news topics we talked about on tonight's live. Before we do go, let's go inside the comment section. As always, let's just go inside the comment section first before we do go. And honestly, if you're watching this for the first time ever and you enjoyed this live and you're watching this on X, drop a like, retweet if you haven't done that already. If you're watching this on YouTube right now, drop a like as well, drop a comment outside the live. If you're watching this on X, drop a comment as well. If you followed me during this live and you're watching this on X or YouTube, thank you so much as well. And tune in every night. But before we go, let's just go into the comment section before we do go. Shelly, Mike says, good day, Miles. Let's go, Mike. How you doing? Shelly says, this is all incredibly bullish news. Good on WeBus strategy. Should take a leaf out of their book. RLUSD ETFs all the way. We need regulations. Facts. Let's go, Shelly. Absolute facts. I agree 100%. Night Miles and CMF. Pablo, let's go. See you tomorrow same time as usual as well. Davey, let's go. See you tomorrow same time as usual as well. Shelly, let's go. See you tomorrow same time as usual as well. Good show. Great information as usual. Much love, Miles. Thank you for your time. Let's go, Curtis, brother. See you tomorrow same time as usual. Great to have you back. Take care, Miles and CMF. See you all tomorrow. Ray, see you tomorrow same time as usual, brother. Good night, everyone. Thanks, Miles. See you tomorrow. Orphan, see you tomorrow. Same time as usual as well. Thanks a ton, Miles. Really appreciate all you do for us. Have a lovely night, all. Let's go, Lena. See you tomorrow. Same time as usual as well. Do you see Polkadot ETF happening? If so, when? Well, they're estimating at a between 90 to 60% chance of Polkadot ETF happening. When? Quarter maybe towards the end of the year is what they're guessing is going to be. Stay cool in the heat wave, Miles. I'll send you some cold weather your way. Freezing here. Good night, all. Let's go, Shelly. See you tomorrow, same time as usual. Good night, Miles and CMF. Stay well. Nice live. Let's go, Carol. See you tomorrow, same time as usual. Night, Miles. Callie, let's go. See you tomorrow, same time as usual as well. Good night, Miles and CMF. Brilliant show as usual. Can't wait for tomorrow's show. Let's go, Joe. See you tomorrow, same time as usual. Good night, Miles and CMF. Excellent news. See you tomorrow. Free forever. See you tomorrow, same time as usual. Always a pleasure listening to you speak real-world economics and crypto news. Thanks, Miles. Good night and see you tomorrow. Artistic, let's go. See you tomorrow. Same time as usual. Absolutely amazing. And happy Pisces. See you tomorrow as well. I just saw your hi, happy Pisces. Sorry about that. It's good to see you as well. See you tomorrow same time as usual. Now, what do you think about Jay Clever saying XRP will reach 1,000 to 2,000 this year if certain things line up? John, what do I think about that particular coin? XRP can reach the sky, in my point of view, as long as it gets its 3 green lights, which is case goes away, first green light, regulation, second green light, utilities, third green light, which is straight out regulations. Just once again, just to say thank you, honestly, to everybody that tunes into this live every night, Monday to Friday, 10 p.m. London time. If you watch this for the first time ever, this was CMF Live. It was episode 324. Episode 325 is tomorrow. Same time as usual, 10 p.m. See everybody tomorrow, same time as usual. Everybody, honestly, have a good night and a good day wherever you are around the world. And just to point this out, the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See everybody tomorrow for episode